Hello, I'm Judith Miller, an attorney at Administer Justice. I'm here to talk about reverse mortgages. I will be covering the difference between a traditional mortgage and a reverse mortgage, the myths regarding reverse mortgages, and the advantages and the disadvantages of a reverse mortgage. First, a look at the difference between a reverse mortgage and a traditional mortgage. Traditional mortgage is a forward mortgage used to buy a home over time. During the loan period, the homeowner makes payments to the lender. The loan balance goes down and your equity goes up. The loan payment consists of 4 parts: principal, interest, taxes, and insurance. It's lumped into one payment, but those 4 parts make up that payment. At the end of the loan, the homeowner owns the home and owes nothing. A reverse mortgage is different. It's a special type of home equity loan, typically used to either pay off a mortgage or to get money for cash flow. The loan money can be dispersed as a lump sum, as periodic payments, as a line of credit, or a combination of these. The loan then is not repaid until the homeowner no longer lives in the home. With a reverse mortgage, the homeowner must have substantial equity in their home before they can even apply for a reverse mortgage. During the loan period, the loan increases as interest and fees are added and the homeowner's equity decreases. At the end of the loan, the homeowner has much less, if any, equity in the home and owes a large debt. That debt is usually paid off by the sale of the home. So let's take a look at some of the misleading claims or misleading statements with reverse mortgages. So you may have heard the claim, "You'll never make another mortgage payment again." That's very misleading because if you remember, in a traditional mortgage, there's principal, interest, taxes, and insurance. It's true in a reverse mortgage that you don't pay principal or interest, but you still will have to pay property taxes and insurance. Another claim you may have heard is it will not affect your Social Security benefits. This is misleading because government benefits that are based on your income level may actually be affected. For instance, Medicare and Medicaid, and certain type of Social Security benefits. Another one is it's tax-free cash. This is really just a sales pitch. The IRS never considers a loan taxable income, and a reverse mortgage is a loan. So of course it's tax-free. Another claim, you still own your home. Technically true, but you also have all the responsibilities of home ownership. You have to maintain it. You have to pay the property taxes. You have to put insurance on it. And if you don't, you will lose your home. So now let's take a look at the advantages and the disadvantages of a reverse mortgage. First, the advantages. It may allow you to age in place, meaning you can stay in your home. It can also provide cash on hand for your bills. It can be used to pay off an existing mortgage and provide more disposable income. And it also offers financial options when your children are in good financial situation and have no need or expectation of an inheritance. Okay, now some of the disadvantages of a reverse mortgage. A reverse mortgage is a loan, at the end of which the lender will own your home. Now, a reverse mortgage can be an expensive way to borrow money, and it's financially complex. It also can limit your options for the future. A reverse mortgage, remember, also can be foreclosed on. Some borrowers can and do lose their homes. Okay, a borrower can lose their home if they fail to pay their property taxes, if they don't provide hazard insurance, and if they don't keep their property in good repair. They can also lose the home if they rent the property out, or if they take out additional debt and pledge the property as collateral. Okay, and so finally, let's look at the alternatives to a reverse mortgage. First, you could sell your home, downsize, and use the proceeds to get the surplus cash that you need. You could also tap into your savings, your IRA, or your 401k. You could also take out a conventional home improvement loan, a home equity loan, for repairs, for instance. These may involve a second mortgage on your property, but with much lower costs than a reverse mortgage. You could also look into a deferred payment loans offered in Illinois to help pay property taxes. These programs are often offered to those who are over 65 years old and have incomes less than $55,000 a year. I hope you've learned something about reverse mortgages. Please think twice before considering a reverse mortgage. And if you have any questions, please call Administered Justice at the number below. Have a blessed day.